Listen up. We here. It's your boy, TBT, aka the Brainless Trader. And back with another one. You already know. Y'all can hear me okay? I'm gonna try to turn this music down, make sure y'all can hear me good. Let's see. Make sure y'all can hear me good. Alright, y'all should be able to hear me good. Alright. So, we here with it. Today what I wanted to do for y'all is just kind of go over a little bit of a market review. As you see on the screen, we have made $2,000 in the live, so claps for that, you feel me? But anyways, I'm just kind of whispering right now because I just want to give a little bit of a market update for y'all, and then I'm gonna be out of here. So ain't no trades gonna be taken today. This is just gonna be a little bit of a market overview because we would have already missed the move for today. So anyways, reason why there's no trades for today is because the move happened at 2 a.m. For the most part, it's already sold out liquidity. So let's break that down real quick. What we got going on over here is price essentially entered into a fair value gap, small fair value gap right here at 2 a.m. this morning. 2 a.m. fair value gap. Large looking order block here. Really just looking at the fair value gap here and this order block right here. Price didn't touch the order block, but basically cleared, stayed above 50% of this fair value gap, and then shot off. Now, there's no news today, so that's the reason. Morning. That's the reason why I would not have taken a trade today anyways. So the fact that this happened and we got almost a 70 pip move out of it is crazy to me because I was not planning on taking no trades just because of the fact that there's no news at 2 a.m. or even that further than that, like right now. So this would have been the move to take, and then you've got a pullback of sorts right here that didn't enter more than 50% of this fair value gap range. You can just see, looking at it with your eyes, that would have been an entry right when that came back up. You start getting this bullish action, knowing that we haven't breached liquidity yet, which is all the way over here. Liquidity would have been way up here, right here, and then here. We would have been able to safely get into this move as well. So, but I was sleeping at 255, you feel me? So I wasn't even tripping over this. But as you see, price went a solid, even if we were to enter right here, price went a solid 50-ish pips before it reached liquidity first. Like right up there would be where I would have taken my profit because I don't want to get into none of that. But then you see price gave us another pullback and went and breached liquidity even more so. So that's all fine and dandy. Mondays are days where you're either going to get a move like this, and if there's no news, there's going to be no news and you're not going to know when the move is going to happen, or you're going to get nothing on Monday. So that's the reason why I pretty much stay out of the market on Mondays and I don't worry about it. I don't stress, because now, as you see, what we've gotten is between the DXY and this. Let's go to the DXY. Like this last Thursday came all the way down here. This is a previous fair value gap. This is 50% of that fair value gap. Essentially, it did not close below 50% of that fair value gap, as you can see here. So boom, now you're looking at, okay, what's going on to the upside? Price essentially came back, made an order block, came back into the fair value gap and order block the next day, and didn't shoot up that much. Basically shot up like a few pips, but it was kind of a back and forth, as you can see on the hour chart. It came all the way down, went all the way up, came all the way down, and went all the way back up. I didn't take no trades on Friday, as you can see, tabulated by the fact that there's no arrows on my chart. But now you see the continued movement from Friday happened to what I just explained to you. So that's all fine and dandy. But what we've seen now is that if you're looking on the higher time frames, let's just look here on the 4 hour. You can tell we've got some sort of either we've got a premium, right? Because if we're looking at this range, the most recent high on the 4 hour to the most recent low, premium would be above 50% of this area. Let's get these executions off the chart so y'all can see what I'm talking about. But essentially 50% would be above this area if we're still bearish. This is the most recent high to most recent low. Now, really, this is the most recent high to most recent low, and price has broken this. But if we look at higher time frame, most recent high to most recent low, this is what you got. This is 50%. This would be a premium if we're going to stay bearish. Now, the only thing I have against being bearish now is the fact that the DXY has made sustained movement down to the downside, even breaking previous lows from the past week. So if we're looking at this, right, you've gotten essentially on the 4 hour, the swing high. This would be the breaker here. This would be the breaker on the 4 hour at least. If we're looking at the 2 hour, you can look at this. You can look at this a little bit better. High, low, high. This would be the breaker. And we're going to change the colors on these because I like the blue to be my breaker color. I think I like this blue pretty much. I don't know which blue. I'm not partial. They're like the same anyways. This would be the breaker. Now price is traded past the breaker. So in my model, if you're looking, let's go to the trading model rules. So we push the trading model rules over. You should be able to see the trading model rules now. And what you have here is essentially the first thing that we get into looking at is a run on liquidity against the higher time frame bias. Now, then you got wanting reciprocal movement in the DXY, and then you want to look at the higher time frame fib to see where the premiums and discounts are. Then we want the formation of a breaker with price trading past and retesting that breaker. Now let's turn this music down a little bit so y'all can hear me. Turn this music down just a little bit. Okay. So this piece is what we were just looking at. Price trading past the breaker and then retesting that breaker. This is where on the higher time frame I'm looking to see what the DXY has continuing downward, because we want to see what exactly is going on with the DXY in that matter, right? So let's go back to our charts. If we're looking at our charts now, we see price trading back up into the breaker. This is the breaker, price trading back up into the breaker. Now, we would need to see some sustained movement down to get the recent lows from past weeks to really trust that this is going to be now a bearish US dollar, which would mean it would be bullish in foreign currency. Now the question is now, where would the breaker be over here? I'm not 100% sure because it's not 100% clear yet. If we take all this stuff off of our charts, we're looking for a low, high, and lower low. This would technically be the breaker on the 2 hour. On the 1 hour, you're kind of looking at the same thing, right? You could say that this is the low, high, and lower low, right? But it's kind of iffy. If this was the breaker, then we could say this high up close candle is the breaker. Let's take all of these extra things off the chart, right? These are all from last week. Take this liquidity. This was an order block. We're going to take all that stuff off the chart. And now let's just focus in on this breaker here. If that is a breaker, price technically has already retraded back up into it. Now it's sought out the first buy side liquidity. Now, we would really want to see price trade above these levels, these relative equal highs, buy side liquidity, and really leave fair value gaps open on this side of the chart to signal to us that we are really going to continue in a bullish motion. Now, the higher time frame bias, if you look up MRCI concepts show us there's a guy that basically he essentially ICT introduced us to him. He basically looks at the data from previous years of trading, right? And he compares them. So I'm going to show y'all a glimpse of that here in a second. So right now we're in the middle of July. So I'm going to show y'all kind of what that looks like for the middle of July. All right, so let's pop over to that. Let's pop over to that here. We're gonna stop screen sharing. And what we're going to do is we're going to share with you the MRCI concepts. Now, these are concepts that ICT has told us are not, we can share these things. So this is stuff that you can find at mrci.com. Essentially, it gives the data for, I think, 40 years, 25 years, 10 years. And this is the way the market moves every year for the most part. Now, the information that we have about what to do with it is deeper, but I'm going to give you a synopsis of it, essentially. So what we have here is that price typically in the GBP, it typically in the middle of July is getting ready to move pretty bullish, pretty strong to the bullish side up until the beginning of August. And the USD is usually getting ready to make a slide down, pretty bearish from the middle of July to the end of August. So these next 2 weeks are going to be very important. If we can continue to see sustained price movement, bearish in the DXY, is synonymous with this, and bullish in the GBP. So essentially DXY bearish, GBPUSD would be bullish, especially if the DXY is bearish. We're going to start seeing a lot of buys going forward these next couple of weeks, at least, depending on if market structure holds. Right, so let's go back to our charts. All right, let's go back to our charts here. We pushed it. We should have pushed it through. All right. So back to our charts. If we can continue to see that bearish movement in the DXY, price not trading above this breaker, continuing movement down to sell side liquidity, we're going to be in line with the MRCI concepts, higher time frame bias. Similarly with the GBPUSD, if we can continue to see movement above this breaker level, if this is the main breaker. I'm not 100% sure on the breaker over here, because I really like this breaker. 1, 2, 3. I just don't like the fact that the candle is so large. Like, I would want it to be a lot smaller for me to say that that's the breaker. But I can say that at least on the hour time frame, you can, and then maybe on a 30-minute, you can see low, high, lower low, high sub close candles. Got these two. You could even just put it at this one if you wanted to, right? Either way it goes, you're seeing a slight breaker here. If this was to stay untouched, these things are to stay open and continue to create more open fair value gaps, trade above, and can start to get that buy side liquidity. Like basically you see price maybe trade in here tomorrow and not breach this and then go up again. And seeing that movement here, price not going up above this and continue to trade lower, then we're going to see bearish movement here and bullish movement in GBPUSD. Now, this could easily just be a discount on a bullish market if the US dollar is going to continue to go up, right? We're talking about discounts being price trading past the 50% level of a specific range, recent low, recent high, right? And essentially this would be a discount. Now, price trades past the 1 here, that's where I can say that, okay, we're really getting sustained movement down here, especially if we trade back up here and leave fair value gaps open up here and continue to trade down. So that's just my synopsis for today. Like, we'll see. I'm not really making no trades today, so I'm about to end the stream, but I just wanted to give y'all a quick market update. And we're going to be on this stream a lot more, so y'all let me know what y'all want to see. Essentially, I only trade the DXY, GU, EURUSD, and some indices, but I focus on EURUSD and GBPUSD, compare them to the DXY. So that's where I'm going to be at. I don't trade much else right now, at least. Looking into a couple of other options, but I like what I trade, so I'm really not going to be looking at a whole bunch of charts. Like, this is where we're going to be at. I like to focus in on learning and understanding the charts that I trade, because I can continue to execute on these charts, understanding them, and make profits. You feel me? So with that said, we're going to go ahead and end the stream. I'm going to let the end page play for y'all. thank y'all for watching. Much love to y'all, and see y'all on the next stream.
Here, this is facts. I enter right here. It's a demo, but I'm just showing you my executions. I enter right here after the impulse. We already talked about why I entered. I entered because of a order block on the higher time frame, 15-minute, and fair value gap, and I waited for a lower high, got in on the impulse. Boom. I waited until price gave me what I wanted price-wise, till I got to my goal. You don't have to wait all day, all right? Me personally, with a 10 lot size, trading the FTMO $100,000 account, if I can get $2,000 to $3,000 in a day, I am so happy. If I can get $1,000 profit in a day, and that's all it gives me, I'm fine with that, okay? It's all about stacking profits up day by day, week by week, month by month, year by year. It ain't about big profits. Now, I left the trading because my stops are a profit, and I'm in the same direction as my higher time frame bias. I have the leverage, okay? I will leave my trade in until price gets to that next level of liquidity, which at the time, what I had been targeting, let's see, what was I, if I can remember, what I had been targeting, to be honest with you, I was targeting this lower sell side liquidity, to be honest with you. But I like to have a modest target in case, you know, that doesn't happen. So I think, where was I? I was, okay, here is where I was. Was it? Alright, I'm a little lost again. Okay, here is where I was. Yes, this is where I took the trade. And I was targeting this sell side liquidity, but in all honesty, I knew that there's a fair value gap on the hour right here, and this is the end of the fair value gap, and you can see that's just about where I got out. Now, we can put a filter here. Actually, I'm going to go to the lower time frame and see if I can find the lower time frame fair value gap that I was targeting. Okay, boom. So you see, there's a fair value gap here, and there's a fair value gap here. Now, a modest target is this first fair value gap, okay? You're looking at getting, you know, for me, my model that I've chosen for my CT is the 25 pips per week model. If I can just get 25 pips per week or more, right, at least 25 pips per week with a 10 lot size, with a $100,000 FTMO account, that's $2,500 a week, that's $10,000 a month. 5 figures a month, that's changing my family's life. Facts. Okay, I got a full-time job, I got family, wife, kids, like, that's changing us. You feel me? If I can do that month after month, that's changing. I don't want nothing else than that. 25 pips a week, change my life, change your life, right? So